What are fractional shares? In this video, we will go through all the things you need to know to get started investing in fractional shares, which can enable you to get a slice of your favorite stocks at a price you can afford. But first, remember to like and subscribe to our channel for more content like this, and don't forget to click on the notification button to get updates. Getting started. Have you had your eye on popular stocks? The kind of stocks by big-name tech, healthcare, or corporate companies like Amazon, Google, or Tesla? Adding just one share of these stocks to your portfolio means that you need to invest more than $1,000. Don't have that kind of money? You don't need thousands of euros or dollars to get you started. With fractional shares, you can own a small piece of these international companies without having to splash out a lot of money. What are fractional shares? Fractional shares are a portion of an equity stock or ETF that is less than one full share. This means that if a stock was split into thirds, there would be 3 fractional shares. Fractional shares make it easier to diversify even with small amounts of cash, so that you can put together a portfolio of high-quality investments that include companies and sectors that you find most appealing. By opening the stock market to everyone, fractional share investing has become a game changer, democratizing the market and making it possible for anyone to invest. While an investor can buy parts of a company through stocks bought on the stock market, a fractional share can help you access the market at a lower cost, even if you can only afford a few dollars. Think of it like a pie. The further you cut into it, the further the pie itself will go. While the slices are worth less and less, the more you divide them, the value of the overall pie remains the same. Fractional shares are sold just like any other stock. All you need to do is simply place a buy order and specify the amount of money you would like to invest rather than the number of shares. Do fractional shares pay dividends? Owning just a portion of a share will not remove privileges that come with certain stocks. Just remember that the dividend payment you receive will depend on the number of shares you own. So, for example, if your stock pays $1 for a whole share and you own half a share, your dividend payment would be 50 cents. How are fractional shares created? The ability to buy and sell fractional shares is relatively new for retail investors, but the concept of fractional shares has been around for quite some time. For example, if you participate in a dividend reinvestment plan, DRIP, this often results in owning a fractional share. Here is how fractional shares are created. Stock splits. These take place when a share is divided into smaller chunks. Whereas the overall value of the shares remains the same, the market price of individual shares decreases. Companies typically split their stock to boost the stock's liquidity and to attract a wider pool of investors. Stock splits don't always result in an even number of shares, so a 3-for-2 stock split would create 3 shares for every 2 shares you would own. This means that if you have an odd number of shares, you'll end up with a fractional share after the split. As a result, 3 shares will become 4.5, whereas 5 will become 7.5, and so on. Dividend reinvestment plans, DRIP. Any investor may want to reinvest their dividends to buy more shares through a DRIP. DRIPs can often result in the purchase of parts of shares. As the amount drips back into the purchase of more shares, it may not be exclusively limited to whole shares. Mergers and acquisitions. Fractional shares can also be created when 2 companies either merge or one buys the other. This typically occurs because companies combine the new common stock using a predetermined ratio, which often results in fractional shares. Occasionally, some brokerage firms may split whole shares intentionally so they can sell fractional shares to clients. In this way, an investor with limited funds who may have their heart set on a relatively pricey stock may invest half of the money to purchase 1/3 of one of these shares, and the other half of the funds could be invested in lower-priced stocks, allowing them to buy full shares. Why buy fractional shares? Fractional shares can be a great way to experiment with the stock market, most especially if you're an investment novice, which then can enable you to own a wider variety of stocks, offering you the potential to grow your money further. Here are some more advantages. You may invest in stocks that would otherwise not be able to afford. You cannot afford to trade that $3,000 per share stock, let alone buy more than one share at that price. With fractional shares, you can build the portfolio you want, since you can buy the amount of stocks you can afford, be it $5, $50, or $500. You may benefit from a wider pool of investments. Investors with limited amount of funds typically resort to low-cost stocks, but thanks to fractional shares, you can buy a piece of any publicly traded business, including some of the biggest companies in the market, like Facebook, Airbnb, Alibaba, Netflix, and others, which trade for hundreds of dollars per share. And with the ability to own a slice of any company available out there, you can opt for those you believe have the best chance of performing over the long term rather than selecting those you can afford. You can build a diversified portfolio. Building a diversified portfolio is key to investment success, since it can help reduce the risk from betting your money on one single company or industry. But building a well-diversified portfolio that contains just a few shares of well-known stocks could potentially mean that you have to make quite the upfront investment. With fractional shares, diversifying your portfolio is less expensive. Make the most of your investment. You may think that buying a piece of top stock with just $25 is an insignificant amount. However, your money will instantly start working for you without having to wait for months or even years to amass sufficient funds so that you can purchase the full share. And while the amounts may be small at first, compound interest will work its magic, and these initial contributions have the potential to multiply into something significant over years. Want to get started by investing in your favorite company? With CC Trader, you can trade thousands of fractional shares in other instruments including stocks, bonds, ETFs, and funds in over 40 international markets. Start by downloading the app from the App Store or Play Store or visit the website. Create an account and deposit some funds. Use the powerful search to find your favorite stock. Click on the box under the Buy button to switch from shares to value, and then in the box right next to it to input the value you would like to invest. The fractional share has been added to your portfolio. If you found this video useful, please like and subscribe to our channel for more content like this. And don't forget to click on the notification bell to get updates.